One of the biggest mistakes that a newer trader can make is not learning how to annotate and how to mark up their charts, okay? How to read price action. So again, we're looking at a very bare bones chart here. This can be, somewhat simple and somewhat basic to some, and it can seem like rocket science to a lot of other people. But what we're looking at, 5-minute time frame, I'm kind of looking at, so if it was me personally and I'm analyzing this chart, obviously, we're not going to know what the market is going to do, right? This is all after the fact. All we really know going into the New York Open is that we've got some highs right here, okay? We're going to keep it very, very simple. So one thing that I'm going to do is I'm going to mark out these pre-market highs, London highs, whatever you want to call them. Overnight session highs is what I'm going to mark out. So I'm going to have a little bit of what we're going to call a supply zone, right? And then I'm going to kind of see here, what did we do here as far as the lows? Where did we wick down to in the pre-market before New York session opened? And I'm going to see here that we've got a low right here about 5 minutes before the market opened. So great. So what am I looking at? Now what I'm looking at is a little bit of a range. Okay. So what I want to see on either side of this range is I want to see one of these sides break. Okay. That could give me a clear little, indicator where I should be long or should I be short, or where I should be looking for potential pullbacks or bounces and so forth. So you can see the first 5-minute candle of the day, we break through this most recent low here from the pre-market. Great. So what I'm telling myself is that if this market does continue to bounce, right? If this market bounces and let's say, it chops around and it gets rejected, and the next thing you know, we lose, right? We lose this low, I want to be short, okay? Now, if you're just kind of looking at the market from an outside in macro view, all you're going to really notice is, hey, market opened, we're just shooting up to the high side, right? But are you ever really thinking about the potential downside? Because remember, as a day trader, you need to be ready for both sides of the play. So I have a potential short. If we do bounce, we get rejected maybe at the top of this range and then we fall through, that's 100% going to be a short position for me. Now, whether I choose to ride that position for 20, 30, 40 points, or whether I choose to scalp it for 3 points, scalp it for 5 points, is my discretion. And it's also your discretion in your personal prerogative as to what you're looking for. Again, every trader is different. I'm more so of a scalper where I'm just looking to catch a little piece of the move and move on to the next trade. You may be a longer holder of your day trades where you're looking for higher return on that risk. That's fine, right? Some traders are looking for, a 1-to-1. Some traders are looking for 2 Rs, 3 Rs, 4 Rs. That's all fine. It just understand who you are as a trader. So once I see us finally start to break through, right? Notice how we break through that overnight session, that pre-market recent high. We're breaking out of this range. Great. Now I'm looking at this chart in a little bit of a different view here. I'm not so focused on the short anymore. What I want to see us do is break that most recent pre-market high. I would love to see a pullback. I need something else to kind of tell me, hey, we're holding as price is strong here, even though it's chopping back and forth, price is strong. So what can I use? I can use a 20 period moving average, which is on my chart right now. This is a 20 simple moving average that you see on my chart. I'm actually going to make this a different color so we can kind of differentiate that from those lines that I drew on the chart. We're going to make it purple. Actually, we're going to change that. We need to make it a little bit of a darker color so it stands out a little bit more. So what we're looking at here, right? Let me get back to the chart. What we're looking at here is now price has broken this most recent pre-market high or overnight high, London session high, the most recent swing high, okay? We've established that the low of day is here, the bottom of the range. We've established that if we do bounce and we get rejected somewhere in this vicinity and we push back down through, we want to be short. But now that we've broken through, we've actually closed through that prior swing high, what I want to see is that pullback. I want to see something that's showing me price is holding. So I'm going to use a 20 SMA. You can use anything you choose. You can use a 10-day moving average. You can use the 21 EMA. There's no right or wrong way to do this. You can simply just use that range, right? You can draw yourself a 10, 15 point range. So it could look something like this. So where you start drawing your own boxes and you say, I'm going to take this high wick, I'm going to take this wick, and I'm going to go down to, you know, where these candles close, and I'm going to draw a range here, right? We'll draw a little bit of a range, and let's actually make this a different color so we can see it a little bit better as well. We're going to make this, I don't know, a darker gray. So notice this where we got rejected once, twice, three times, where it was acting as that resistance. Notice how once we broke through, there was a lot of choppiness price action in this whole zone. Great. So we're holding to the what side, guys? To the long side. Is there any indication here, even with this big red bar, that I want to be short? No, because why would I want to be short on pullback into a previous resistance zone? Any previous resistance zone is going to act as new support until otherwise confirmed. So if we were to close below this zone, back test it, maybe get some bounce and then lose it and start to push lower, then maybe we can look at some short-term bounce. So now that we've broken that most recent swing high here from the pre-market, we've got that wick up here. What I'm looking for is for price to confirm, and that's going to be between 9:50 and around 10 o'clock, and this is going to go back to Friday's price action. So as soon as I see a start to really push up, I want to be long. Now here's where a lot of traders can be wrong on their analysis, which is picture perfect. This, for me, this is an A+ setup here. A break of that pre-market swing high, we pull back, and then we go. Perfect break and retest. But where traders can tend to get into a lot of trouble is because they're trading size that is way too big for the move. Now remember, if you're trading the NASDAQ, you are trading out in the wild, wild west. This thing can move 30, 40, 50 points in a matter of 5 minutes. It can move 100 points in a matter of 5 minutes. What you have to do when you're playing these technical ranges and these zones, the only way you can manage your risk is by trading size that's going to allow you to withstand pullbacks. So let me ask you a question. Would you be concerned on this red candle pullback, which happens to be close to 40 points from your entry, right? Once we broke in that swing high, we broke it, we pulled back. Would you be concerned 40 points playing one or two mini contracts? I think so, right? I think you're going to be down over $500. You're going to be down close to $1,000, depending on if you're trading one or two contracts. That's a lot of money, and that's really, really scary for a lot of traders to kind of cope with. But if you were trading, let's say, two micro contracts, where even if you were in a position that technically, because technically this is still valid long, technically you're still holding in a 40-point drawdown, well, now you're only down about $160, $180, and it's not going to feel as bad as being down $1,000, right? If you were trading much larger size. And it's going to still give you the opportunity to hold this trade as long as we're above this key area, and as long as we're holding something like a 20-period moving average. I like to use a 20-period moving average. You guys can use as you choose. But as long as we're holding that area, you can then hold this trade longer and start to target some of these bigger price targets. So if you're in anywhere in this zone, right, because you're not going to have the picture perfect entry, right? This is not necessarily a scalp. This is more so of a day trade where we're looking to trade ranges and trade zones. If you're in this trade anywhere around, let's say, let's just call an ace and ace, a spade, anywhere from 20,166 to 20,177. You're in anywhere in this 10-point range, okay? If you notice, if you just hold through this because you're trading the right position size, this price goes up to 20,221. From a price of around 20,168, guys, we're talking about almost 40 points here in a matter of 15, 20 minutes. If you were to hold on for just 5 more minutes here and kind of trail that stop up a little bit, we go up to a price of 20,245. So we're talking about a move within 20 to 25 minutes of 60 to 80 points. Okay, and it obviously goes much higher, but I'm not even going to get into how much potential you guys could have taken off of that, because again, we're human beings. We're going to see cash. We're going to take the cash when we got it. But this candle, this red candle is what gets traders very, very trapped, right? It gets them trapped. It gets them scared. It gets them stopped out of positions. But if you don't know how to draw on your charts, you don't know how to read price action, previous, resistance, new supports, because notice once we did that run up, notice where we pulled all the way back to, guys, right back to the zone. You see that? Even though we lost this 20-period moving average for a few minutes, we pulled right back into this prior zone and we pushed higher. So there's also another potential for a trade here once you do see a pullback like that, right? Notice the big run up. Now you've got a new high of days, right? So you can start to mark out your new high of day. And then once we start to pull back here, you can tell yourself, if we get back over, maybe we can have a little bit of a trade opportunity right here. Nice pullback into the prior zone, prior resistance, new support, prior zone, 20 period moving average. We hold, we consolidate, and boom, explosion candle. What would be our price target, guys? Are we trying to target all the way up here towards the moon? No. We already know that we put in a high of day here. This is this line that I drew. So we're going to try to target somewhere up into that zone. So that could be on this candle. That could be this candle. That could be this candle. That could be this candle. Hell, if you think it's going to break and continue higher and then we close red, as soon as we take out the little two wicks to the downside, you can get out of this candle here at 1135. A lot of space here to kind of, take some trades. I want to show you guys something else that's very interesting. Again, once you start to get experience and you start to analyze price, notice where this pullback pulls back to. Guys, that previous little breakout spot here, that sneaky little channel where we could have taken that long, pulls right back into that zone and then gives you a little bit of a bounce, right? So again, this wasn't the most ideal bounce, but you could start to see that now you've got these ranges where we're trading inside. And if we start to lose the range here and we get back up into the prior zone with failing to take out a previous swing high, then maybe now we can start targeting the downside, right? Now, again, you don't know that all of this is going to happen. All you can see in real time is what's happening in real time. So what I would start to do if I was a new trader just starting out, I'm always going to mark out that overnight session high and low, right? So we can just mark out that overnight session or the most recent overnight session high and low. So we don't need to take all the price action. We just need to take like the previous hour or two right before New York opens, okay? And sometimes it happens to be the entirety of the overnight session. But again, what I like doing is I just like taking the previous 2 hours in pre-market. I like to mark out those highs and lows. That's what's going to start off with that's going to start my day off. That range is going to start my day off. Once I see us break one of those sides of the range, then I'm going to start looking for multiple opportunities, either continue that trend or look to short back to the bottom. Or if we do lose the bottom of the range, look to get into that area short. So start marking up your charts, start journaling, start watching price action, and start to see what you can do on a day in and day out basis. Guys, if you like what you see and you like to join and trade with myself in the community at Evolution Traders, I do have a free section now. It's a very small section inside my Discord for people to just kind of come in there and get to know me a little bit better and see some of the stuff that I post. I'm going to do some daily education for you guys in there. And then if you guys are a little bit more serious and you guys want to take this trading stuff a lot more serious, I do have a private section in that community where I've got all of my courses. We do live trading in there. We talk each and every single day live in real time when these setups are setting up. So sometimes when I'm looking at these setups in real time, I'll start to post those setups, and that way we can all gravitate our eyes towards those setups and we can go around the table and start to get some feedback. Make sure to like, comment, subscribe, guys. We'll see you guys on the next one.